Hello and welcome to BQ Prime. Rupee has opened stronger this morning after some measures came in from the RBI. They may not be immediately impact how things are moving on the Forex front, but they do seem to suggest that the RBI is willing to protect and encourage Forex flows if required. We'll talk about what got announced in the course of this conversation, but joining us to talk through that is Jayesh Mehta of Bank of America. Jayesh sir, thank you so much for taking the time to speak to us.
Hi, Ira.
Okay, let me start, sir. A bunch of measures encouraging banks to raise more money overseas, encouraging dollar deposits, allowing shorter term flows into the corporate and the government debt markets, and of course, some flexibility on external commercial borrowings. What was this package intended to address? Where did it come from?
So, of course, nobody knows. We can guess what is in their mind, right? So my guess is, two ways, right? So, some people actually view this, particularly traders and others, that they already started panicking and they may try to test them. Some people view that okay, they don't really want 80 to breach, and that's why this measure. I view it slightly differently. I think this is a mild measure which they have taken, and it is more like liberalization done on the forex front, which is earlier also we had short-term bonds allowed by FBI, less than 1 year. So they have just made it easier for the time being, and of course the window is till 31st October. So from that perspective, they have allowed that, which is like the ARB money normally comes in. Then you, of course, have the FCNR and NRE deposit kind of situation, and also the ECB, where they have kind of increased the, given a little bit leeway on the spread. That was required because globally the spreads have changed, right? So that they have done, but they have actually kind of also given an indication that if required, we can come out with a stronger measure. And this also becomes an enabler for them, right? So I look at slightly deeper than that, and I don't know whether they have actually thought that way, but I think it's a great measure. And if you have to do something, what we did in 2013, this is an enabler for that.
So again, were there, we were talking to Anantarayan earlier, and he was talking about the dislocations in the forwards market, for instance, some talk of dollar shortages in the last couple of weeks or so. Could that have spurred them on more than the fact that the rupee was hitting one record low after the other, which actually doesn't mean anything, sir? I mean, because all currencies are falling against the dollar.
Yeah, so three things, right? So one is, of course, the forwards had come off low because while intervening till, if you look at it 4 months back, they were buying forwards and the forwards were higher than the money market. That was also a dislocation. And now actually it went lower than the money market, but that there was nobody to correct that. And therefore, by allowing short-term flow, that already is corrected. So it has to be linked and aligned with money market. So that's already corrected, right? So between yesterday and today, and that will remain that way, right? So our money will definitely, if the forward comes lower, the our money will keep on coming in, right? So that's very positive. I think in terms of there was also last week, right? There was already the narrative being built up. Yeah, there were people saying that emerging market is okay. They may not be get disturbed so badly. But within emerging market, India, because it's a net crude importer and stuff like that. Now, day before, instead of $10 crude coming off, if it would have gone up by $10, $15, the whole narrative for 8150 was built in, right? And I think that would have been not acceptable by RBI. It's not that a level which is they are looking at, right? So it is if DXY goes to 109 and we go to 8150, 82, they would be okay, right? So if everybody else we depreciate, that's fine. But then if we are singled out because we are a crude importer, therefore you need kitties or amenities or to defend that, and that I think they will defend. And I think by this enablers, what they have done is, through 2-3 routes, you're allowed, basically foreign money to be coming onshore, which was not coming onshore, the ARB money or ECB or to that matter, FCNR deposits, because the forwards were very high 3 months back. And when the forwards came off, there were restrictions in terms of short-term money because the short-term forwards came off, and normally the hard money comes into short-term, right? But this, they have done a great job, and I think if I just relook at this with 2013, right? What was the game changer in 2013? Is like we did allow FCNRB and we gave forwards at discount, right? Now you made the enablers of the front end, whether it's FPI short end or FCNR, NRE, all that you are allowed, all at one point of time. If we want to do it, if it is they want to really intervene in a hard way, right? They can just offer forward at a slightly discount in the money market, and therefore that will attract flows. And now that you have the enablers in place, you just have to then do a buy sell swap. Of course, they have done a sell buy swap last last three times, but they can actually do a buy sell swap if they feel it is required, and maybe at a fixed rate, little lower than the current forward, and that will attract huge money. So basically, of course, it's not a net inflow but it definitely gives you a spot dollar inflow.
So, of the measures, sir, the short-term money into corporate debt and government debt is what will have immediate impact. You see enough flows coming on account of that?
Yes, in fact, it has already kind of started. People were already, if you look at it last 1 week data, you see FPI debt flow a little bit into it. Of course, not all of them is ARB money. Some of them is genuinely coming in, but there were some ARB money. But typically, they have to do 2 years and 3 years, and then of course the worry is like as you roll down to 1 year, so it's not fully locked in up, right? So it's more a trading call that we as we're taking that, okay, fine, let me earn the up for a year, and then maybe I'll reverse it out after a year or so. But now with this, you don't have to worry. You can actually lock in into up, whether it's 6 months or whether it's 18 months. Because earlier you could not do even 2 years up, right? Because your worry would have been like, what happens 1 year down the line if I'm more than 20-30% of my holding into less than 1 year, and that's why I was forced to kind of unwind my position. So that definitely changes the equation here.
Okay, so some money could come in there. On the FCNR, NRE deposits, it depends on how banks play this, right? I mean, how much they offer in terms of interest rates to see whether that will bring in any meaningful money.
Yes and no. I would say right now, if you really look at the short end going up globally, at least freeing up, at least the bank has the discretion. If they require it, they may actually offer it. But yeah, as I said, like this is a soft measure. If required, if you announce an auction of buy-sell swap, right? That can actually kind of create what we saw in November 2013.
Okay. The ECB front you mentioned is justified because, I mean, in any case, rates have moved up, spreads have moved up. So you needed to give them that leeway, particularly on the interest cost, the all-in cost ceiling.
I think I lost you.
Can you hear me, sir?
Yeah, now I can hear you.
No, I was just asking that the ECB measure that they've taken, that is fully justified, right? Because, as you said, spreads are moving up. Can you hear me, sir?
Yeah, I can hear you.
Okay. No, will the ECB measures taken bring much relief to corporates?
That's we have to see, right? Of course, this is mainly large corporates, right? I'm not sure about it, but yeah, it all depends on forward, right? So it's like with the forwards, because ECB also the corporates will take it on a total cost basis. But right now the spreads are so wide. At the current forwards, I don't think it makes sense for them to bring foreign money. It is better for them to borrow locally at this juncture.
Okay. So on the issue of the rupee and where it's come from and where it's headed, do you see anything sort of out of the ordinary in the level or pace of depreciation of the rupee that would require either the government or the RBI to act? Because before the RBI, remember that we saw the government acting as well via import duties on gold and some export duties on crude, etc.
So I think on crude, it is more of a windfall situation. On iron, it was more of, again, kind of managing inflation onshore. That was more like export tax. But I think gold maybe yes, and nobody really like, at least I don't know. We've been trying to figure it out. May why such a large import of gold, right? Sorry, June. That's a little bit surprising, but anyway, they have done that. I don't think that really matters much. You know the gold story, right? If you have higher tax, anyway, the gold will come anyway if it is required. So
Yeah.
I don't really see that gonna stop differently, right? But more importantly, I think on the export tax on, when we are refined, our refineries are exporting, maybe as finance minister said, maybe give us some shares also. You are making refining margins are high and making huge windfall, maybe give us something. I don't know, it's right, wrong, I really don't know, but the whole world is doing it, right? So from that perspective, it's in a different era we are seeing.
No, but if some of this is coming in from the rupee weakness, maybe not the windfall tax, but the gold duties, what the RBI has done. My question is that at 6% depreciation in a year like this, why are we reacting?
No, I don't think I didn't read that as even the gold one. I didn't really read that as really trying to defend rupees. But yeah, it's like huge gold import kind of is always worrisome. But now whether the duty works or not, that's a different question mark. But yeah, so I don't think it's really do anything to do with current account deficit. I don't think that will matter much. But I think it is just unnecessary imports can be reduced. Of course, we have electronics still coming in big way. Uh, I won't be surprised if they have something coming in, but of course, because of the WTO and other things, they may not be able to do so. But that's something can happen. But at this juncture, I don't think all this is required. Gold is something. It's always been debatable. You have debated with so many governors, right? Whether it is useful, right, wrong. Everybody had different views. Even the governors had different views. So, and I don't really have a view on that. But I only feel that we have done it many times when we have higher import duty. It comes through another alternate channel, but it does come if required.
So, given the global situation and given current projections of current account deficit, balance of payments, etc., would you expect the rupee to continue depreciating? Is there a line in the sand now, somewhere around 80 levels, given that the RBI seems to have come in just ahead of that?
So I would not put any number. Like you see, if you look at it's more linked right now. It's all rupee depreciation is nothing to do with local. So I think that's the story because India is oil importing, blah blah blah. Current account deficit, 3% current account deficit. We can manage. It's not a big thing, right? We can easily manage that. We have enough reserves. In fact, when we didn't have reserves, also we had 3% deficit, right? So from that perspective, I'm not too worried about that. But of course, the world narrative is right now different. It's like your rates business, right? So on the rate side, also you're seeing like offshore guys are pricing or we're pricing 1 year forward at 7.5%, 8%, maybe even now it's also 7% plus, right? But for them, it's very different story because they are actually doing it in maybe 10, 15 countries, and maybe, maybe 3, 4 they make money, 3, 4, but as long as 70% they make money and 3, 4, 30% they lose money, that's fine, right? So there is a different story altogether. But for us, I would not really put any level. My own thought is if we depreciate purely because of the dollar strengthening, DXY is at a new high. When at a new high, how much higher it can go, we don't know. And if we are depreciating with the rest of the world, that should be okay with RBI. But the rest of the world is not depreciating, and we are depreciating just because crude's gone up by $10 or $15. We can still manage them, and that's something they will defend. That's my thought. I don't know anything, but that's my thinking, that if we are going to be singled out, then we'll definitely defend that.
So where are we going right now, do you think, on the rupee?
No, right now, of course, you see, I think $10 coming off day before was a shocker for everybody, right? Oil now, crude now at 100 is kind of, or even at 110, it's not that people are going to try and test new stuff, right? So it's now whether you know how dollar strengthening is there, flight to safety. You have the thing, euro showing almost 20-year low, maybe at parity, or it's almost at parity, below parity. We don't know how it goes. So if the other things, it's purely nothing to do with India macro.
Yeah.
India macro is good. India macro can sustain, and I think even if you look at their note yesterday, I think India macro is pretty good. So it's standalone India macro is not a problem. It's only because of dollar strengthening, because of flight to safety, because of whatever it is. I think only from a dollar strengthening, it's not a rupee weakness story, but it's a dollar strengthening story.
Okay, you're avoiding giving me levels that you think I guess there's too much moving.
Yeah, it's too much moving. Like, today you are at 105, 106, right? Like, can the XY go to 110? I don't know, right? So can it go to 109? I don't know. It can, right? So if it goes to 109, can we go to 181? Maybe answer is yes. But everything being here, just because crude went up by, of course, if it goes to 150, that's a different story. But if it goes up to 120, 125, and the traders try to bring it and cross it, the target, then definitely I would say RBI intervening big way.
I'll leave it at that. So thank you so much for taking the time to explain this to us. Thanks for watching.